Now, recent banks' earnings results shows that there's the resurgence of FX trading income.
Okay.
That's from the non-core income lines of the banks. What has been, majorly responsible for this?
Well, I think the banks have the central bank to thank for this. The reason is because we've seen more flexibility returning to the foreign exchange market. Before now, banks have always recorded fantastic FX trading gains, but in 2016 and pretty much towards the end of 2015, when we recorded a lot of calm in terms of foreign exchange market activities, we saw this income line disappeared. But in 2017, we've seen that resurgence. Truth be told, you saw that Access Bank recorded, I think, about 65 billion in trading income from foreign exchange. If you look at Zenith Bank, I think they did about 46 billion. Pt.2 did something sub of $30 billion in trading income. I mean, we've seen these three banks taking the lead in terms of FX trading income, and it speaks more to some of the activities that are going on within this bank. So I think it's majorly linked to the fact that we've seen improvement in foreign exchange activities, and we hope that this will be an income line the banks can sustain going forward.
Now, there's also an issue of high impairment charges, which, of course, has been a constraint for bank profitabilities. Yeah. Now, what sectors have been responsible for this?
Pretty much, I think, I think I was saying the other time that if you analyze the bank's loan book and their impairment charges across sectors, we've seen that, in fact, in-house, AfriInvest, we've termed it the high-risk sectors. So general commerce, for example, manufacturing, the upstream oil and gas, most especially. And in some companies, some banks, you see transportation sector, also constituting some of these, high impairment charges. We think that the banks are trying as much as possible to restructure their books. Some of them who recorded very high impairment charges, was due as a result of some of the foreign currency denominated loans which they granted. And we see that some of them have been able to restructure. UBA was one of the banks that did some restructuring sometime in 2015, and we think that this is what the banks will continue to do, try to put their books right, even though non-performing loan is still a major issue to worry about. But again, like I mentioned, if you discount the likes of some of the Tier 1 banks, First Bank, EcoBank, and of course Diamond Bank, who still have above 10% non-performing loans. For the quality Tier 1 banks, they don't have some of these issues. Of course, it's something that the industry, we have to worry about.
Right. AfriInvest is planning to launch its 2017 banking sector report. That should be in the UK?
Yeah, in the UK.
So give us an outlook of what the Nigerian banking sector is likely going to be next year.
Okay, so what we have analyzed is that AfriInvest is partnering, for example, with the London Stock Exchange in collaboration, of course, with the Nigerian Stock Exchange. We've seen that some of the issues that confronted the sector in 2016, we've seen a lot of those issues dissipating. Foreign currency crisis was one of the issues that we faced, and that has sort of been hold down now that we've seen some flexibility in the market. And we've seen that very critical sectors of the economy are beginning to pick up. We've seen efforts of government from the fiscal side trying to ease doing business in Nigeria. We've also seen that a lot of investment have been put into agriculture. I mean, the stories are just positive for Nigeria, which is why we titled the report, Nigeria Reopens for Business. So we think that the banking sector is beginning to benefit from that positive momentum that the economy is generating, which is why we think that the future for the banking sector is great, and that especially from the core earnings of the banks, we see the sort of resilience that they've displayed over the years, and we think that this is going to be sustained going forward.
Now, given that the banking index has actually gained over 60%, yep. That's year to date.
Correct.
Is there still, a possibility of an upside before the end of the year?
The perspective we like to take in analyzing the upside potentials for the banks will be to compare Nigerian banks across regions. And a way to look at it is to analyze their price-to-book ratio. If you look at Nigerian banks, on the average, we have price-to-book of about 0.8 times. But if you compare to other countries within Africa, you say that we're pretty much the lowest. But again, to balance the argument, return on equity, ROE for the banks have always driven the performance of banks, generally speaking, such that price to book move in tandem with return on equity. So we try to do a ratio that if you look at the price to book of the banks relative to their ROE, and you compare across most countries in Africa. And from analysis, we found out that Nigerian banks are still very underpriced when you look at their price to book relative to their return on equity. You know, so we see banks like Nigerian banks are trading at 9.5 times, you know, of their ROE, for example. But a bank in banks in South Africa are trading as high as 13.1 times. You know, it's perhaps Egypt that is the cheapest in that region when you look at Africa. But again, it speaks to volume to how much of opportunities are still abounding within the Nigerian banking sector. So we believe that a lot of banks currently are trading below their book value even, you know. So with the exception of Guarantee and Stanbic that are doing above 1 times price to book. I think Guarantee is close to about 1.8 times price to book. You know, we still see a lot of banks doing below even 0.5 times price to book. So we think there are opportunities for the banking sector going forward, before the end of the year.
All right, thank you very much, Robert, for giving us that insight on the banking sector.
Thank you.
Thank you for your time. Robert Omotunde is the head of research at Afri Invest. After the break, we'll look at PPP as key to actualizing Nigeria's economic growth. To stay with us.